What's up, guys? Welcome to the weekly technicals for July 7th, 2019, and we're currently looking at the economic calendar for this upcoming week. And last week we really didn't do too much. We did have the start of a new month, 4th of July, and also the NFP, as well as Canada Day on Monday. So we had a lot of holidays and events, and also the start of a new month last week. So I didn't really do much trading at all. But looking ahead into this week, we don't have anything for Monday, but Tuesday we do have a good bit of dollar index news, especially around New York session as well. We have a speaker, so keep an eye out on the majors for New York session on Tuesday. And then going into Wednesday, we'll probably see a lot of volatility with the dollar CAD currency pair, because we do have BOC, the rate statement, overnight rate, and a speaker for dollar index on Wednesday. So that'll be between about 10 and 10:15 a.m. Eastern time on Wednesday. So we'll probably see a pretty volatile New York session on Wednesday as well, going into probably the close of the day, considering that the majority of the news does release towards the later end of New York session. So keep an eye on dollar CAD for Wednesday. We'll probably see a lot of volatility there. And looking into Thursday, not too much on the radar aside from dollar index. We have CPI and core CPI at 8:30 Eastern, so another New York session for that, and then a speaker again at 10 a.m. So likely see some more volatility here into Thursday for New York session, and same for Friday as well. Core PPI and PPI at 8:30 a.m. Eastern on Friday, and so we pretty much have a pretty solid week in terms of upcoming news releases and also the folders. So we do have a good bit of medium to high impact news this week between dollar index, which is going to lend well to any volatile price action in the major currencies there. So let's go ahead, we'll move over to the charts, and we're currently looking at dollar index on a daily chart. And so I wanted to go through this with you guys and just really edit the charts as well while we're going through it, because obviously last week you guys can see that we did push up above our levels here at 96.50 to 96.60. We wanted to see the market find some level of resistance. Notice how we closed above it, came back down, retested it, so old resistance now acted as support, and then we traded higher. So what I'm going to do is I'm going to remove this, and I'm going to adjust this line from 96.50 down to this new up into this new ICT bearish order block here. So the low on this candle comes in at 97.37. Perfect. So I'd like to see if we can find some resistance here, and then what I'll be looking for is I want to see the market start trading for the liquidity down here at 95.80. Now if we get above this candle here, so if we get above 97, we'll call it 97.60. So if we get above 97.60, then we'll likely head for the 98.30, run these daily equal highs, and potentially trade back up into the 98.50 level. But if we find resistance here, we should see a significant sell-off trading below 95.80. And this will be the ideal scenario that I'll be looking for this week. So keep an eye out for dollar index on that. Now again, remember, if we get above 97.60, then the short side of things is over, and we have to look for bullish price action again. So that's only if we get above this high, ideally. But as long as we remain below here, even if we just consolidate sideways for a bit, I'm looking for further weakness taking us below 95.80 with a continuation below 95.20. Alright, and looking at dollar index, we had this marked out, which was our weekly ICT bullish order block that you guys can see here. And clearly we traded right through that. So what we need to do now is we need to adjust this down to this ICT bullish order block. Now since we've already traded within the wick, I'm going to use the open of this candle, because that's the next level of support that the market should basically turn around at. So open is 12.17, so we can make sure we got 12.17 here. Alright, cool. So as long as we either consolidate here or find some support, we should start trading higher for 114 big figure with a continuation up above 114.50, especially if we get the weakness on dollar index. Now, say we trade below here, because we do have this ICT bullish order block. So say we don't find support and we trade below it. if that's the case, then we're going to want to run these equal lows down at 111 big figure, right? So if we close below here, now I'm not short, I'm not going to sell this market, I'm not short, anything like that. I'm still bullish until it proves to me otherwise. Now if we get below this ICT bullish order block and we close below it with a daily candle, I'll be looking for some sort of a retest back up into this level. There's going to be either some sort of an ICT bearish order block that forms within this area, or I'll simply just use this previous ICT bullish order block as old support turned newfound resistance, and then I'll go short, so around this 112 big figure level, targeting 1.11 big figure. Alright, so about 100 pips from there. Right? Yeah. Cool. So that's what I'll be looking at on the downside. But again, I'm not short this market. I'm not overall bearish on Eurodollar right now. I'm still bullish until it proves to me otherwise. And up until the point that we break below this ICT bullish order block, I'm still bullish. So I'll be looking for either some sort of a chop sideways in here, which will look something like this. We could just bounce back and forth. Right? And then we could see some sort of a run higher, right? So we're either going to consolidate, then run higher, or we're just going to right out the gate, find support, and start trading higher. Because in my eyes, there's really no reason for us to want to trade lower from here. So I'm sticking with my bullish bias, especially based on the fact that I'm still looking for a weaker dollar index, which should already lend to stronger foreign currencies. And also when we get to EURGBP, you guys will have more context as to what I'm talking about. But ideally, I want to see this market turn around and find some support, trade higher, heading into that 1.14 big figure, which is about 200 to 300 pips in my eyes, still remaining on the upside. All right, if we look at British pound, not too much going on in here. Honestly, I've been kind of hesitant to trade this pair, so I was personally looking for, so if we zoom in, I was personally looking for this market to find some support at this down candle here. We failed to do that, right? So Wednesday, Thursday, it was kind of hanging around that level, but then look what happened on Friday. We closed below it. So this is the same scenario that would invalidate longs for Eurodollar. Notice how we stopped and consolidated around here for a day, and it's going to look differently on an hourly. So if we trade into an hourly, look what we did. We're just consolidating around that level. Then we broke below it, okay, and we closed below it. Now we're coming back up and retesting it. So this is a very similar scenario to what could happen with Eurodollar if we can't find support at the ICT bullish order block. So with British pound, I was looking for the market to find some support here, and then I was looking for us to trade higher up into the 27s and 28s. Okay, we did not do that, so we've since broken below here. So right now I'm pretty much on the sidelines for for British pound. I don't really see anything that I want to trade off of. Now we could reject this low, so we could have just came all the way back down, cleared out the sell stops, and then we could trade higher from here. But personally, I need to wait for more information before taking any trades on British pound right now, because I don't see anything clear that I want to take. Now for the downside, we do have this long wick here, and we may want to trade below that, which comes in at 23.80. Okay, so we could see a continuation about 150 to 200 pips on the downside if this market cannot find any support and run higher from here. Okay, I personally believe they have a lot of buy-side liquidity above this 27.50 to 28.50 level, but with us being all the way back down here, if they do not reject this low and trade higher, then they're likely going to want to run the liquidity below this old wick back here at 23.80, which we'll likely see a longer term sell-off if we do take out this low. Right, so we could trade below this low back here, all the way back down into the 118s. Now, obviously, that's much longer term, but that's what I think we'll see if we take out this low. And the reason behind that is if you look at this low here, it formed on January 3rd, 2019. So as of right now, this is the 2019 yearly low. If we take out that yearly low, then we more than likely have the high of the year in place, which would be here. And we'll probably see a continuation to the downside. So that's what I'll be looking at for British pound. Again, pretty much staying on the sidelines for this right now. Nothing clear that I want to act on. I would highly recommend you guys be very cautious and keep it to like day trades or scalps with British pound right now. No swing trades. and at least until we get some more information. All right, now looking at EURGBP, you guys can see, let's go out to a weekly chart really quickly. If you look at this on a weekly chart, we've just had nothing but 1, 2, 3, 4, 5, 6, 7, 8, 9 consistent bullish weeks on this. Now we've since traded into an ICT bearish order block here, but we do have relative equal highs on the weekly. So personally, I think they've got a lot of liquidity built up above this 91 big figure on EURGBP, and I see them wanting to take it higher, at least above that, okay, which is this level we got marked out here. Now, if we get a continuation on EURGBP to the upside, that's going to lend well to strength in Eurodollar and potential consolidation to further weakness on British pound. So we may see British pound go into a consolidation while this pair remains to trade higher, also allowing Euro USD to trade higher while dollar index either trades lower or moves in a consolidation. So be cautious of that, and that's one of the reasons I like Euro dollar more than British pound right now, because this currency pair is showing strength, which lends well to euro, and dollar index is showing potential consolidation to weakness, which will obviously lend well to stronger foreign currencies. So personally, it makes more sense to be looking at euro dollar right now, at least until we get more information with British pound. So keep an eye on EURGBP. Overall, there's not too much I see that they would want to come down for, unless we, of course, like break below, 89.20. Then we may want to take it below, 89.80 here. But overall, look for continued strength up into the 90.90s. So 90.95, 91 big figure. That's obviously my upside target on this. And if we get above that, obviously we will primarily have the low of 2019 in as well for EURGBP, and we'll likely see a continuation higher, which will promote well to continued strength on Euro USD. So if this pair trades higher above 91 big figure, then we could see euro dollar get back above 14 big figure, 14.50, and we could even see it longer term come up above the 16 big figure. So we'll have to see what we get with that, but overall, expect a continuation higher on EURGBP, lending well to consolidations on British pound and further continuation higher on Euro USD. All right, looking at dollar CAD, and I just want to point out one more time, I know we've been mentioning this almost every weekly technicals, but the precision of this daily ICT bearish order block. We were talking about the markets, and if you go back to the May weekly technicals, you can just scroll down the YouTube feed there and find any of the weekly technicals in April or May, and you'll find that we were talking about dollar CAD in this area. We were looking for a run up into this level, and depending on what the market did when we got there, it was going to determine whether we're going to go lower or if we're going to go higher above this high. Notice how the market failed to close, right? It wicked right perfectly into the level. Then the next day the market sells off, continuation lower, retest this old low, continuation lower, come all the way back up, trade into this bearish order block, sell off, one up candle here, just barely failed to touch the low, but pretty close, sold off, took the liquidity out below here, came back up, retested the old low over here, sold off again, taking out the liquidity below here. So we've seen a very bearish market on dollar CAD, while dollar index has been moving sideways. So this is what's leading me to believe that we're going to see a significant decline on dollar index, because dollar CAD is already showing early signs of a weak market. Also, if you go back here, the yearly low for dollar CAD was this low that we had in place February 1st, right, which came in at 30.68. Then if you look, this past Thursday's low comes in at 30.37. So we've got a new yearly low now. So what I see is we have some liquidity built up back here at the 127.30 level, and we also have some liquidity here at the 28 big figure, 27.80 to 28 big figure. So I see us wanting to take this lower, and especially if you look at this zoomed out, right? Came up, we formed a high, we failed to make a higher high here, we've traded back into the bearish order block, we've sold off, came back, retested that, sold off again, cleared out the daily liquidity. Now what are we looking for? A retest, which happened here on Friday, and a continuation below this 28 big figure. So notice what the market's done. Up candle, 3 consecutive bearish days, closes below the up candle. Now we have a newly formed ICT bearish order block. Friday for NFP, the market trades up into that, leaves a big long wick. Body of the candle closes right at the previous open. So I'm going to be looking for a continuation to the downside on dollar CAD. This is a significantly bearish market in my eyes. And this, along with euro dollar, will be, in my mind, it's the better two currencies to be focusing on right now. So they're the most clear. Looking at dollar CAD, though, I do think that we want to see some continuation lower. It may be more gradual rather than as quick as it's been from, since we hit this 1.3560 level. It may be a little bit slower, kind of how we've seen this choppy price action in here. That may be what we get going down below this low at 28 big figure. Nonetheless, still looking for overall weakness and bearish price action on dollar CAD. Alright, so that is it for today, guys. If you have any questions, just drop a comment below this video and I'll answer you there. Hope you guys enjoyed today's session, and I will talk with you all next week in the weekly technicals. You guys have a good trading week, and talk with you then.